Hi everyone, welcome to today's video. So take a look at this snippet and you will see that I have made 160% return on a stock called as Equitas Small Finance Bank. So congratulations, I have been able to figure out how to find multi-bagger stocks. So can I tell you? The short answer is no. I can't tell you. No one in the world can tell you how to find multi-bagger stocks. In my journey of finding Equitas Small Finance Bank, I had to lose money in at least 3-4 stocks, and then I was able to find something like Equitas Small Finance. My returns are being shown as 160%, but honestly, the honest return on this part of my portfolio, which is the multi-bagger type of a portfolio, would be around 40-45% because I lost money on a lot of stocks. Now, this is a point that many investors do not communicate. I'm honestly communicating this to you. Now, why am I telling you this point? Because sitting in 2023, I am looking to create an entire portfolio of potential multi-baggers. In this portfolio, I am going to add roughly 50 stocks. Why 50 stocks? I will speak about that in a minute. And out of these 50 stocks, at least 20-25 of those stocks will be crushed by 80-90%. So this video is for slightly more advanced users. If you honestly want to get the assessment as to what framework goes into finding multi-baggers or at least trying to find multi-baggers, please continue to watch this video. So with that said, let me also introduce you to the 5 stocks that I'm adding to this portfolio. 3 of them will be from India and 2 of them will be from the US. So these 5 stocks I'm going to discuss. Also, a very quick shout out to our sponsors for today, which is Vested. It is an excellent US stock investing platform. Many of you ask me that, what type of platform can we use in order to buy US stocks? So I would highly recommend Vested. I personally use that platform. I love the interface and they provide a lot of research tools. So in case you are looking for more information on the US stock investing, you can definitely go and check out Vested. So with that said, let us kickstart our conversation around 5 stocks. And before that, let me quickly share the fundamentals around multi-bagger investing, so to say, and what are 3-4 key points that you must remember. So if you're looking to find stocks which can go 4x or 8x their current price, then there are 3 critical points that you must remember. So the first critical point is that usually the stocks that will go 2x, 4x, 5x would have a low PE ratio to begin with. This is a very, very important point. An additional clarification here is that it's not as if that every stock which is trading on a low PE will end up becoming a multi-bagger. It is a very commonsensical point, but I still have to say it. Now, why is this critical? So let us understand it through the example of Asian Paints and Equitas Small Finance Bank. So let me first talk about Asian Paints. It usually trades around a PE of 80-85, right? Now, it is very, very unlikely that the PE of Asian Paints will go on to become like 170 ka PE, right, at any stage. So from that particular perspective, Asian Paints is a great stock to have if you're looking for a 15-20% CAGR on your portfolio. But by having exposure to stocks like Asian Paints, HDFC Bank, vagera, it's not as if that these stocks, Asian Paints, HDFC Bank, will double or triple from their current valuation in a very short span of time. This is very commonsensical point. Now, I am not pushing you to try and find like risky stocks. Again, very quick notice here that this video is slightly risky in nature. If you're a complete beginner to the stock market, drop off. I'm categorically telling you, drop off. You don't need to watch this video. So since you have not dropped off, please press the like button, because like button dabane pe you don't have to pay GST. So please press the like button so that these type of videos reach out to more people. So the central point that I'm trying to establish here is that, see, when it comes to big stocks, for example, HDFC Bank has a massive market capitalization. Similarly, Asian Paints has a massive market capitalization. If they are already at a PE of 80-85, this PE expansion is unlikely to happen. This is the first critical point, and at least the stock price will not go up due to PE expansion. So this is the first central point that you must understand. Now let me juxtapose this example with something like Equitas Small Finance and my bet on it. So I purchased bulk of Equitas Small Finance here somewhere here, and this was June of 2022. So if we take a look at the PE ratio of Equitas Small Finance between June to August, because those 3-4 months I aggregated the stock quite heavily. So you'll see that it was trading somewhere around like 20 and it fell all the way to a PE of 14-15. So average PE nikal ke aayega 16 ke aspas, right? And at what PE is it trading right now? So it is trading at a 19 ka PE. So a little bit of expansion of PE has already happened. Now, even from this point of a PE of 18, something like a small finance bank can easily command a PE of 25-30. Again, please notice that this is not a recommendation to buy Equitas Small Finance Bank. I'm simply teaching you fundamental concepts. The important point that I want to highlight is that with something like Equitas Small Finance, the PE expansion scope is still there, but with something like Asian Paints, the PE expansion scope is not there much. So this is the key takeaway that you need to have. So a multi-bagger stock or a stock that could become a multi-bagger first and foremost needs to have a low PE to begin with. अगर आपका PE already बड़ा हुआ है, then the price of the stock is not going to move due to PE expansion. Now comes the second key point, that pick a stock where there is EPS growth. Now what is EPS? EPS simply means earning per share. Now if the per share earning of a stock is growing and it is likely to grow, then a stock price could also move quite aggressively. So to help you understand this point better, let me pick the example of HDFC Bank, right? So HDFC Bank, if you take a look at EPS, you will see that EPS or earning per share of HDFC Bank is going up quite dramatically. Even right now, the stock is available at a PE of 20. Historically, the stock PE of HDFC Bank has been around 25. So in HDFC Bank right now, the PE can go from 20 to 25. So little bit of PE expansion can happen there. And second, and more importantly, is कि उसका EPS काफी बढ़ चुका है, right? So EPS has already grown a lot. So from this point, can the company become extremely profitable from an OPM perspective? Maybe, maybe not, but the rate of EPS growth might not be that high. But if you juxtapose this again with something like Equitas Small Finance, so you will see that abhi iska EPS is around like 5.16. So there is room for EPS expansion and PE expansion both on something like Equitas Small Finance. Now again, not an advice that you go and buy this stock as of now. I simply want to help you understand the framework because this is very, very important. So I hope that this point is extremely clear, that in order for a stock to become a multi-bagger, it should start with a low PE and it should start with a low EPS. And the room should be there for growth on both these points. Then comes the final point, that see, I cannot just swipe my finger in the air and say that, okay, Equitas Small Finance kharid lo. Yeah, buy like some other random company. No, it is impossible. So here you need to follow 80-20 rule. Now what is the meaning of 80-20 rule? So imagine this, that if you end up buying 50 stocks and out of those only 20% win. So how many stocks win? Only 10 stocks win and they become like almost, let's say 3x, right? So 3x ho hi jayega. So let's say that if you invested equal amount of money in all these 50 stocks, then what is the total return that you're getting? Now let's imagine that 40 stocks go to absolute zero, right? Absolute zero, right? Kuch bhi nahi mila aapko. And the stocks end up becoming multi-bagger, so to say. Then you do the math and tell me in the comment box how much profits have you made, or have you made any profits? इतनी मैथ आपको आनी चाहिए, right? So from this perspective, I hope that the framework of finding like multi-bagger is clear to everyone, that there is no framework to finding multi-baggers. You just have to make your bets sensibly. Now this is something that I'm doing in the year 2023, that my core portfolio is done. I'm not investing more money in something like HDFC Bank, HUL and all these stocks. I'm not doing at all. Already I'm on good profits on all of this. This is my core portfolio. I'm very happy with it. Now I'm creating a new portfolio of roughly 1.5 2 CR के आसपास, where I will try to find multi-bagger stocks and take this 50 stock strategy. Now when I'm buying it, when I'm cutting my position, why am I buying it, all the details I will share in the YouTube member community, because those are quick updates. For example, I spoke about Delta Corp 5 days back when there was a massive correction in the Delta Corp stock. Why? Because there was 28% GST ka issue ho gaya tha. So from that perspective, Delta Corp fell. I purchased quite a bit of it. Within like next few days, the stock gave like a breakout of 6-7% already. So this is how fast things move in this multi-bagger category. So I can't possibly make videos around it. In case you are interested in getting quick community updates, do consider joining the YouTube member community that I run. People have appreciated it. You can read all the comments here and we have very rich, deep conversations there. So with that out of the way, let me start discussing 5 stocks that I'm adding to this multi-bagger or potential multi-bagger portfolio of mine. So the first stock that I've already added to this portfolio is Delta Corp, as I had previously spoken. Now let me very quickly touch upon 3-4 critical points about Delta Corp. Now what is it that Delta Corp does? For example, if you come to Goa, and I live in Goa, so I keep on seeing whatever work Delta Corp is doing. So 2 critical points here. So one is that Delta Corp runs a lot of casinos, and most of the casinos are present around Panji, right? Above Panji, towards the north of Panji, there is another area called as Mopa, where a new Goa airport has come. So Delta Corp, number one, runs a lot of ships around Panji, right, where they have physical casinos. That's their first line of business. Second is that they are building a gaming infrastructure, so to say, एक तरीके का casino मान लो, physical casino around the Mopa airport. Now, many of you who have been to Macau, right? For example, Macau is a gambling destination for Chinese people in a way, because in mainland China, gambling is banned. So a lot of rich Chinese go to Macau in order to gamble. Now, Macau brings more money compared to Las Vegas in the US. Right? This was like a fascinating fact for me. So I was there in Hong Kong a few years back. So I personally saw that, Macau was like a massive destination. Now the goal in Goa seems to be like that. Now culturally, do I accept it? Do I stand for it? Do I stand against it? It hardly matters. For me, Delta Corp is an investment. So I'm just simply looking at it from that particular lens. If you are iffy about I do not want to put my money in gambling companies, don't do it, right? There is no push here. I am simply speaking about Delta Corp from an investing lens. So there are 3-4 critical points that you should know. So the first critical point that you should understand is that almost 90% of profits and almost the entire business for Delta Corp comes from its ship casinos. So it's a Goa focused business as of now. So this is literally point number 1. Point number 2 is that on these ships, 28% GST was always levied. This is a statement from their CFO. Recently, you would have heard the news that fantasy gaming mein government is introducing 28% GST. So Delta Corp stock fell by like 25% that day, right? And so here is a post that I did for YouTube community members where I spoke about the Delta Corp stock, that it has no relation to this entire point of 28% GST because they're already paying 28% GST on their ship casino, so to say. Now comes the second critical point, that okay, ये तो हो गया current business का landscape, that they are paying 28% GST, they have like active ships which are casinos. Where will the growth come for the stocks? Because one part of their business they were converting where? They were converting into fantasy gaming or online gaming, so to say. So this was turning out to be a big bet for them. But as of now, only 10% of their business used to come from this online gaming. I'm simplifying the numbers so that you understand it. I'm not going into like barik detail. I'm giving you mota analysis of Delta Corp. So I hope that you understand that they were not too much into online gaming to begin with. So in this, any regulation comes, they are not going to get hurt by it. This is a central point to understand. Their growth will actually come from this Sin City type of concept that they are building near Mopa Airport. They have like acres and acres of land which will go operational in a few years, and it will become like a mini Macau somewhere in Goa, and people will come for party fun in Goa. And these type of things which are like gambling, there is a section of the society which loves it, and we all know how profitable casino businesses are. By you becoming an investor in casino business, I am not encouraging you to invest in like sin products. I am simply telling you that if you are an investor in these casino businesses, you are making money out of other people's bad habits. So to cut the long story short, the growth for Delta Corp is likely to come from Mopa Airport business that they are doing. Now, is this stock risk-free? Absolutely not. It is not a risk-free stock. There is a lot riding on in form of regulations. If tomorrow the Goa government decides something कि भाई नहीं देना Delta Corp वालों को business, so yeah, there will be a lot of issues around it. Very good stocks, that these type of stocks can get crushed by 80% in one single month. So please remember that also. But if you look at the current performance of the company, you will see that the sales have been constantly going up. No problem there. The profits have been at an all-time high. The stock price is definitely not at an all-time high. If you consider the high of the stock was somewhere around 365. Right now, the stock is at 184. So one could argue that it is trading at a 50% discount from its peak, despite highest ever sales, highest ever profits. Now, doing too much PE analysis on these type of stocks might not make a lot of sense, but just for context, the PE of the stock is around 19. But gaming company का कोई PE नहीं होता because it depends on the online gaming segment, and it depends on offline gaming segment, and also the nature of the regulation in that industry at that juncture. So the PE can fluctuate like anything. But yes, as of now, one could argue that the PE of the stock is sensible. So from that perspective, do your risk reward analysis. If you like it, invest. If you don't like it, don't invest. But definitely invest in a basket format. So let's move on to stock number 2, which is a slightly more stable stock. I would say I already have it in my portfolio in good amount. It has started to give a breakout already, and the stock's name is Indigo Paints. Now, why am I betting on Indigo Paints? So let me first and foremost help you understand the story from numbers point of view. So if you consider the PE of the stock usually is around 80-90, and this is the PE of the stock of Asian Paints, which is its competitor also in a way. But right now the stock is available at a PE of 54. Now you decide whether the PE of 54 is very high, low, this, that. Okay. What I'm betting on in terms of Indigo Paints is the doubling of its market cap. So right now you can see that Indigo Paints is only an 8,000 crore company This market cap is not very high. Can it become a 16,000 crore company over the next 2 years? The short answer is yes, it can definitely become. Why? Look at the size of Asian Paints first and foremost, and look at the growth rate of the paint industry. So right now what is happening is, and this is the market share of the leading paint makers in India, so to say, and you will see that Indigo Paints has only 2% market share. So it's not as if that it already commands like a high market share. There are chances that it will eat into like Asian Paints market share vis-a-vis the other way around, that Asian Paints eating into Indigo Paints market share, because establishing that 2% is really tough, but uske baad growth aana is a likely scenario. Now you might say that, okay, can you give a guarantee that Indigo Paints is going to eat into the market share of Asian Paints? I can't give you a guarantee. That is the risk that you are taking in terms of 2x, 4x. See, you can't have it both ways. On one hand, you cannot say, yeah, okay, tell me stocks that will 4x, 8x. And on the flip side, tell me like safe stocks also. There is no such thing like that. Of course, Indigo Paints can also go wrong. There is no guarantee here. These are all risky stocks. But having said this, there is an important point that I would like to point to. So basically our understanding is, and most of the people that I speak with, they always pit Asian Paints against Indigo Paints. But these are slightly different businesses. For example, if you consider the Asian Paint story, they are mostly into paints business exclusively. They are expanding into home decor business. But on the flip side, the type of product the Indigo Paints sells the most, these are emulsions. There is a difference between emulsions and paints. So one could argue that yes, Asian Paints competing for same set of customers, but on the flip side, those customers are using different type of products. So it's not as if that Indigo Paints is competing with Asian Paints head on. So this is the central point that I want to make. Now looking at the balance sheet gives us more confidence. So for example, again, you will see that, you know what, the revenues have been constantly going up, profits have been constantly going up. Now is Indigo Paints at its highest ever price? Absolutely not, right? So it is at roughly 1500 rupees. At its peak, it was at 2600 rupees. So massive discount on the stock already. So from that particular perspective, there is a significant scope of PE expansion on Indigo Paints, and therefore it is a likely scenario that if you hold this stock for a couple of years, you are likely to see very strong results on this. I am holding it. I have actually built quite good amount of position on this, and I will continue to hold my positions. Okay, so the third stock is a US based stock called as Coinbase. Now Coinbase, what does it do? So it's a crypto exchange in the US. It is a regulated crypto exchange. Now right now there are some very important developments happening in the crypto space. Now many of you would be scratching your head कि यार crypto अभी भी जिंदा है. Yes, it is alive and thriving. Take a look at the performance of Bitcoin over the last 6 months. It is going very strong at this juncture. Now there are so many clarity issues around cryptocurrencies that a stock like Coinbase is going very violently. So let me quickly show you the history of Coinbase's stock and talk about 3-4 critical points in case you would like to purchase it. It is already there in my portfolio. I haven't sold it. It has taken the entire ride that I first lost almost 60-70% money on Coinbase. Then the stock went up by like 80-90%. So let me show this to you on the chart. So here you can see that it used to trade at like $340. Then the entire issue of the markets going down happened. Stock markets went down, crypto markets went down, and the stock bottomed out somewhere in 2022 December. There it was trading at $35 and now it is up to 105. So from 35 there is like 3x gains. I am also already on profit because I had purchased quite heavy volume somewhere around here. So I'm still on very good profits on Coinbase. Now there might be a couple of points that you might have. First would be that should I purchase Bitcoin at this stage or Coinbase? Well, from a value perspective, that from a discount perspective, Coinbase is a better bet than Bitcoin. And in order for the US to keep the crypto ecosystem alive, they need a company like Coinbase, because you need an intermediary player that can help you convert your fiat money into like crypto money, right? So that is an interface that is required. Right now, Coinbase is a regulated crypto exchange in the US. And from that particular viewpoint, I don't think that Coinbase is going to go to zero anytime soon. Now, why am I basing this off on? Because you might have read the news recently that Coinbase के खुद के CEO ने stocks उठा के बेच दिए of Coinbase. Okay, so please understand why that was done. So here is a very quick article on that topic that Coinbase's CEO sold some stocks. Why? Because he is looking to make investment in some of his other startups. This is a very important point because this really comes down to corporate governance issues. One story could be that CEO of Coinbase is a corrupt person. He's diverting money from Coinbase to his other startups. Or the other story could be that, you know what, he actually wants to diversify his bets. He might be seeing other possibilities in terms of creating startups उसको कोई फंडिंग देगा नहीं. No one is going to give him external funding at this stage because he is involved in already a listed company that is going through a lot of regulatory changes. The only way he will be able to build his other startups is by diluting some of his capital from Coinbase. So he already owns a lot of shares in Coinbase, so he sold some of it. Now this news came last month, and look at the performance of Coinbase in the last 1 month. So it has gone up by 85%. So कुछ भी नहीं फर्क पड़ा with the CEO selling his stocks. So this is a central point that you must remember, that if this were a corporate governance issue, the Coinbase stock would not have gone up by 85%. So this kind of gives me a little bit of confidence to keep holding this stock. So then comes the natural question that, okay, why is it likely that Coinbase will go up from this point? So from this article, you will see that SEC, which is Securities and Exchange Commission, this is analogous to SEBI in India, it formally accepts BlackRock Spot Bitcoin ETF. Now, what is BlackRock? Well, BlackRock is the biggest asset management company in the world. Its asset books are huge. Just Google BlackRock. You will get a lot of information on how they have become the biggest asset management company in the world. And if they are backing Bitcoin ETF and are looking to participate in that space, it gives a lot of legitimacy to Bitcoin. So this is the first critical piece of news. The second critical piece of news is that Ripple, which is a type of cryptocurrency, it has won a lawsuit against Securities and Exchange Commissions. This is a very, very important piece of news. And for this, you need to understand the backdrop here, that SEC, which is the securities bodies in the US, it is looking to regulate cryptocurrencies, and they are deciding whether to put them in the securities category or commodity category. Now, according to Gary Gensler, who is the SEC chairman, basically his point of view is that except for Bitcoin, we should put everything else in the securities category so that they are regulated by SEC. Now, that debate is taking on, but please notice the point that they somewhat kind of agree can be tagged as commodity. So they are not necessarily coming after Bitcoin, so to say. Now, in order for Bitcoin to flourish in the US, you need an exchange, and by default, Coinbase becomes that exchange. This is point one. Point two, I can take a look at a news piece here. You will see that JP Morgan is trying to do what? It is trying to build digital solution enabling instant transfer and clearing of multi-bank, multi-currency assets on a permissioned distributed ledger. Now, it might become complicated if I get into the details, but here the distributed ledger technology has worked really well for something like Bitcoin. It has worked well in different set of cryptocurrencies. So it is likely that the traditional banks are going to work with crypto protocols in order to institute these type of systems. So now you need to make a bet that if you're betting on cryptocurrencies, that our cryptocurrency is going to survive for the next 5 years. If the answer is no, don't buy Coinbase. If your answer is yes, that they are going to survive, even 2 or 3 of them, then very, very high likelihood that something like Coinbase is going to thrive. Now, unfortunately, I have run out of time to analyze other 2 stocks. So what I'm going to do is that I'm going to analyze a few more stocks on my Hindi video, and you can find the channel link in the description and comment box. Please go and subscribe there. I will try to release this video very quickly. And also, as a next step, if you are not interested in these type of slightly risky stocks, you can go and check out this particular video of mine where I have spoken about safer stocks. So do go and check it out. Thank you so much for watching, and I'll see you soon.